is planning to engage a firm of financial management consultants from South Africa to facilitate training on financial management assignment. Advise the awardee on tax point in respect to such services. Yes, that is more of input. Yes, that is more of input. That is more of input. But now the concept is the same, is more of importing those services. Do you think for import, what do you say about import? The normal somebody say exempt. Imports. When you carry out an import, what do you do to an import? Tim, we don't forget. They're normally exclusive of VAT, not exempted, but exclusive of VAT. But we must all agree, yes, we must all agree as a team that the concept of the tax point is the same, even on application of the import. Is it the same? The concept of the tax point. Is it the same? As a Potter, we agree that the concept of the tax point is basically August 2025 question. That was a very interesting question. August 2025 question. August 2025 question. So that is question 1B. Question 1B. Look at that question. It was a very good question. A very interesting question. A very, very interesting question. Together. So are we on it? Are we on it? Thank you. We can do this question before we step for break. Can we do this question before we step for break? Yes. So we are being told that Barani Enterprise, we're being told that Barani Enterprise is the value-added tax that is VAT registered business involved in the sale and distribution of both taxable and exempt supply. For both taxable and exempt supplies. For both taxable and exempt supplies. So the following transactions are recorded in the books of the company. The following transactions are basically recorded in the books of the company. So the following transactions are basically recorded in the books of the company. And say for the month of April 2025. For the month of April 2025. So one, sales at standard rate, that is a figure of 1,160,000. What is that? 160,000. What is that? That's an out. Then we say sales made as exempt supplies, 400,000. So the sales made as exempt, that is output, but now exempted. So then we talk about what's called purchase of goods for resales on credit, 580. Purchase of goods for resale, that is 520. What is that? What is that? Purchase of goods for resale on credit. So that's an input VAT. Then we have the next, purchase of stationery on credit. That is 116. Purchase of stationery on credit, 116. So somebody asked a question, does credit affect, somebody is asking for something, does credit, so let me see what Summit is. will the credit terms affect? No. Credit will not affect. Even credits we claim on that together. So then we have the next. We have what you call purchase of fuel for a company car. Purchase of fuel for a company car. Purchase of fuel for a company car. So how would you treat it? But I want us to turn that, are we together? Based on a number, are we together? I want us to, on that together, there was something on that together. I want to correct it so that it makes more sense. Say that purchase of, don't say company car, of saloon cars. Well, saloon cars, well. Are we together? Purchase of saloon car, to make it more interesting, so that the information makes it more. Yes, purchase of saloon cars. Wait first, I've not said no VAT, I've just said purchase of saloon car. I have not said, have I said no VAT on it? Have I said that? I have not. I've just said purchase of saloon cars well. Is that okay? So don't say no VAT or any, I've not said that. Is that noted? Please, we respond with a yes, if that information is clear. I hope I'm clear. I've not said no VAT, I've not said anything. I've just said purchase of saloon car well. Then we have what's called payment of entertainment expense for client. That is 58. We have it as 58. Payment of entertainment expense for client. Payment of entertainment expense for the client. That is 58. So entertainment. VAT Act for 2013. Entertainment, accommodation, catering. How do you treat them? VAT Act 2013. Entertainment, how would we? That should be exempted. Together, team, that should be exempted. Are we together? That should be exempted. Perfect. So then look up next. Purchase of saloon car for director. Purchase for saloon car for directors. 1,160,000. 1,160,000. How would you treat that? 1,160,000. So, director, is that a business expense? Is that a business expense or a private expense? That's a private expense. Now tie it to the saloon car fuel. So if you tie it to a saloon car fuel, what does now the saloon car fuel basically means? Saloon car fuel. So it's also exempted from VAT because that also becomes a private expense. Together. Give it a yes if you're together. Give it a yes if we are together. Are we together? Sometimes those who set exams, Now I've said I have changed it. Yes, I have changed it based on, you see, when sometimes I change the question, it is based on something that was examiner did not do. So when markers are marking those papers, they're corrected together. They're basically corrected together. You see, sometimes we say that sometimes. Are we together? Mercy. Sometimes when I change questions, I just bring another notion, maybe something that you did not see as you. Are we together? Mercy, are you together with me? That is what I'm saying. Are we together? Yes. So the fuel, it becomes non-deductible, restricted or non-deductible. The word is non-deductible. The word should be non-deductible input VAT. That is the correct one. The non-deductible input VAT. Together, Samikis. The word is non-deductible input VAT. The word is non-deductible input or restricted amounts, particular. Non-deductible input VAT or the restricted amount. Is that noted before? Give me yes, the product if together. Yes, that becomes the correct one for it. So then we proceed to the next. We have been told that imported raw materials with custom and VAT paid, imported raw materials with customs and the VAT paid. What is the VAT paid? And the VAT paid, look at that, and the VAT paid was shillings 230. We have it as 230, and the VAT paid was 232,000. Imported raw materials with custom and VAT paid was basically, we have it as repair, to deliver a truck, to deliver a trucks, used exclusively for distribution, delivery trucks used exclusively for distribution, that is 58,000. Then we have what's called purchase of goods. Look at this, purchase of goods, purchase of goods. So we call it purchase of goods. Used in both, look up, used in both exempt and taxable supplies. The figure is 348. What do you think about that? I'm very much interested on that. Used for exempt, and what you call taxable supplies. That's a very interesting one. Exempt and taxable supplies. Exempt and taxable supplies. So we say that used for what you call, used for goods purchased, we say for both taxables and exempt supply, 348. How would you deal with this? So on this figure, what should you do with that figure? If we talk about that figure, there should be apportionment. That should basically carry apportionment. We call it apportionment. So that figure should basically be apportioned. So rent for business premise, rent for business premise to a landlord registered for VAT, shillings 116. Shillings 116. Oh no, all amount for both. Yes, we are supposed to apportion because on that amount is exempt and taxable supply. Are we together? What should we allow? We should allow for the taxable supply. Are we together? Yes. So we've been told that rent for business premise to a landlord registered for VAT, shillings 160. So what is that? For that rent as the last information? For the last information for that. So that's an input. I want us to read additional information and be very keen on those additional information as I read those additional information. Kindly, I want us to be very keen. So the first additional information, so being told that company uses turnover-based apportionment on the mixed item. So it uses what? Turnover. Do we understand that? A company uses what we call turnover-based apportionment for the input VAT on the mixed. Are we together? So what are we going to say? We are basically saying the turnover that is taxable supplies over total supplies times the VAT on mixed apportionment. When it comes to that, on the mixed apportionment. Together, team, on the mixed apportionment. That is what we call turnover apportionment. Together. Perfect. So then lastly, we have what we call transactions are inclusive of value-added tax, at the rate of 16%. At the rate of 16%, we say at the rate of 16% where applicable. So when you talk transactions are inclusive of VAT at the rate of 16%, what do we use? We use 16 over 116. I want us to do one at least. Before I give you a breather, let's do one, the first part of it. Allow me to do the first one is when I give you a small breather. Allow me to do the first one, then I give you a breather. So number one required, compute what's called output, VAT for the month of April. So just do output. One is output, VAT for what I call for the month of what I call of April. Output VAT. Is there anything tricky on that number one? So for the formula, we say taxable supplies. What is taxable supply? This is standard rate plus what? Plus zero rate. But when it comes to total supplies would now be standard plus zero plus exempt. Kindly give me a yes if we are together. Plus exempt. So further, give me a yes. Perfect. So is there anything tricky on the output VAT? Is there anything tricky on the output VAT? VAT on the mixed supplies. VAT on the mixed supplies. So mixed apportionment, look at the mixed apportionment is additional information, number 25, number 25. Number 25, additional April 2025. So that is mixed apportionment. Together. Thank you, Harriet. Somebody else? Are we seeing additional information number 25, April 2025? Perfect, if we are together. And we are getting ready for exam. We shouldn't panic. We are getting ready. I want us to do this is when I give you a small break. So look up the first one on the output VAT. Is there anything tricky there? Is there anything tricky on that? And you're given 2 marks. The examiner compute what's called output VAT. Is there anything tricky? Nothing tricky. If we do it very fast. So this is item. So what we call supply. We have amount. We have the VAT rate. Then you have what's called the VAT. So the cells, we have standard rate cells. Standard rate cells. What is the figure for the standard rate cells? So the figure for the standard rate cells, give me the, I want the figure. The figure is not 160. The figure for the standard rate cells, that is 1,160,000. 1,160,000. What is the rate that we're using based on this question? Are we using 16 over 100 or 16 over 116? What are we using? 16 over 116. So what do we get? 16 over 116. What do you have? 16 over 116. So that should be 160. So another cells. Do you have zero rated? Any zero rated in this question? Is there any zero rated in this question? For this particular question, do you have zero rated? We don't have, but we have exempt. Exempt supplies, we just say exempt supply. What is the figure for the exempt? Is it 400,000? So we have a dash and a dash. So what is the total output VAT? Total output VAT. What is the total output VAT? Give me the total output VAT. So the total output VAT is 1. That gives us 160. Together, that gives us a figure of 160. Are we together? So with that, the end point is this and this. So if you do that, that you have your 2 marks. Is that 2 marks a walkover? That 2 marks, is it a walkover? So take a breather, we come back. I want us to take a breather and we come back. Everybody's in. So we get to the second part. We get total input, and we get input and we get amounts that are restricted. So we have items, stock what you call supplies, supply, we have amount, we have the VAT rate, and then we have the VAT, and then we have the VAT, and then we have what we call the VAT. Together, team, and then we have the VAT. So our focus is on the input now, total input. From there, we shall be able to identify. First of all, we get the total input. Together, team. First of all, we get the total input. We respond to the yes. So purchase of goods for resale. Purchase of goods for resale. So we have purchase of what we call of goods for resale. So purchase of goods for resale. The figure is that is 580. What is the VAT rate? 580. VAT rate. What are we using as our VAT rate? 16 over 116. So we have 16 over 116. So get for me that. Get for me that. So get for me that. So that should be 80 times 16. Get it? What does it give us? We get first of all, and we note that is what is the figure? Just so 12K. So 12K, just note it here. Restricted. This is one of the restricted. This is based on VAT Act, non-deductible or restricted. So then we have the next entertainment. Entertainment. So the figure is 58, 16 over 116. Get for me that. And so that is 8K. So again, we need to note that this. I hope you understand what the question is saying. I hope we are together. Restricted. 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 Then you have saloon car purchase. Purchase of saloon car for director. Saloon car for directors. For directors. So what is the figure we are having for that? This is another example. So that is restricted. So we proceed to the next. We have imported raw materials. Imported raw materials. That's 7,120.
Wasn't the 232,800? I'm asking, wasn't
Yes.
the 232,000 equivalent to 16 over 100?
Yes, see that's 16 over 100 because that's input.
No, it said that the VAT paid was 232,000, right?
I think that was also one of the one of the mistakes. It appears like that, but remember the VAT is not there on that. So just clarify that as clarity on that. The 232 is without VAT. I think the way the examiner sets it, that was the issue. So just note that those figures, those are not VAT. Is that okay? Instruction on it. Are we together?
Yes, we are. Thank you.
Yes. So are we together? Zipporah. There's something on Zipporah. Zipporah. Are you answered, Zipporah? Are you answered, Zipporah? Respond with a yes if you're together. Zipporah, are we together? Zipporah, are we together? Perfect if you're together. We don't want to leave any person behind. So then we come to the next, we have what's called, we have this. We have this. We have. So we have the next. We have repairs. Repairs. That should be 58. 58. Repairs 58. 16 over 116. 16 over 116. It was on catering, entertainment, accommodation, and the private expenses. That is what you call the restricted or the non-deductible input VAT. Together, Florentina. Yes. So that's 8,000. So you can check on the VAT Act of 2013. 2013. You can look at that. The VAT Act of 2013. So we have the next, rent for business. Rent for business. So rent for business, what is the figure? I'm repeating. Get for me that, then I repeat. Rent. Get for me for the rent. So for the rent, it's 16. So when you talk about restricted, based on the VAT Act of 2013, are we together? Based on the VAT Act of 2013, we are saying that they are expenses that we cannot offset against the output VAT, and we call them the non-deductible input VAT. A given example, we talked about catering, accommodation. We have accommodation, entertainment, and then we have the private expenses. That is explanation. Joy, are we together? Joy, if you're together, we respond with a yes. Joy, are we together? Thank you so much if we're together. So then we have the option, but remember, I've not put the lookup because that basically we need to apportion altogether. That has to be apportioned. So the question is, lookup team. Now I tell you why. Yes, section 17. So look at this. Look at why this question is such a simple, but then look at its 3 marks. Are you seeing this? Three marks. Are you seeing this? So the question, determine the total input. I know some people are wondering if they want determine what you call the total input in card and identify which amounts are restricted under the VAT Act altogether. So the question, total input, that's why we did this. Then from that, we can basically now get the restricted. Ariet Manipata, Mercy, are we together? Mercy and Ariet, are we together? Naomi, are you there? I hope Naomi is there. Sami Keys, are you there? Just a minute. Somebody says gross. Now I'm saying, Jacinta, if you look at that figure 232, I'm just saying that the person who tested it, that figure should be without VAT, because if you calculate the VAT, then what is the essence? What is the student going to do? I think it appears like the VAT is already there. But I'm saying, treat it as a figure without. That is not VAT, but that is a gross figure, not VAT. Are we together? VAT is not charged. Jacinta, give me a yes if you're together. That is what I've said. Jacinta. So, and then we say that for import we say that normally exclusive of VAT. Jacinta, I want us to be together. Jacinta, are we together? You're the one we're waiting for. You are the one we are waiting for. Jacinta, are we together? Jacinta, you're the one we're waiting for. If you're together, you give Mwalimu yes. So we're just saying, you see, for imports are normally exclusive of VAT. So VAT is not on that figure. Are we together? That's why we're using 16 over 100. I want you to respond, Jacinta. If there's anything that needs clarification so that we move away from that. Jacinta, you are the one we're waiting for. Kindly assist us to assist you. Kindly assist us to assist you. Is Jacinta there? She's not in. Okay, that's okay. That's okay. That's okay then. So we had the mixed. We had the mixed. She has asked and left. We are very sorry. Then we have purchase of goods. We had the purchase of what we call goods. This is the mixed. So mixed was basically 348. So we have 16 over 116. So what is that figure? But we need to know that this should be apportioned. So get for me that. So get for me that mixed. That should be 48. So that should basically be apportioned. So the essence of this, why have I done the whole thing? Why have I done the whole thing? Because the examiner says, determine the total input VAT. I know guys were wondering, determine the total output VAT. So we give everything away together. That's why we've gotten that. Is that understood, Zipporah? So now we get to the other part and tell us which amounts are restricted under. Which amounts are restricted? Amounts restricted. So now we go to amounts restricted. So we go to the amounts. We call it amounts restricted. Restricted. So the amounts restricted, we have saloon car fuel. Amount restricted is 12 that. Then we have entertainment. Entertainment is 8. Then we have what we call purchase. Saloon car for directors. Saloon car for what we call for the directors. 160. So what is the amount restricted? Get for me the amount restricted. Get for me the amount restricted. What is the total amount that is restricted? The total amount that is basically restricted. The total amount that you say is restricted. Look up, Tim. I want us to get back there. So look up, Tim. Get back there. Are we together? Sonic is, look up. Imported goods with custom and VAT. There was already VAT on that. Imported goods. Sonic is, I don't know why we were seeing, but very interesting. Imported raw materials with custom and VAT. With custom and VAT. Are we together? With custom and VAT. So that should just be 16 over 100 because the examiner has told us with custom and VAT. Zipporah, are you seeing that? Naomi, with custom and VAT. It's okay. We understood with custom and VAT. So VAT is already there. So get for me that. And I think that what Nani raised, what Jacinta raised, that was the good. So because it's very clear with custom and VAT. Is that understood, Mercy, Harriet, Naomi? I need to make so that we must be fair. Minor, I've not been mentioning minor. Minor, are we there? I hope you're there. Thanks. So then that should be 32. Are we together? That is with VAT. The examiner is very clear with VAT. I hope now you have us there with VAT. So what is the total amount restricted? Total amount restricted. So amount restricted, we have it there. So that should be total amount restricted is 180. Yes, is that okay? Total amount restricted, that is on 180. So we respond to this. So that part 2 is done. The part 2 is done. So the part 2 is done. So give me a yes if part 2 is done. Allowable, we call it allowable. Input, VAT, claimable. So already we have the whole thing. So we just simply come and pick purchase for resale. For resale, we don't need to calculate again because we had 80. Do we need to calculate it again? We don't need. Are we together? We had the stationery. Stationery. What is the stationery? That was 16. We don't need to get the VAT again. Imported. Imports. It was with VAT. Import with VAT, that should be 32. Respond to the yes if you're together. Import with VAT, that should be 32. Then we had what's called repairs. We had repairs. What is the figure for the repairs? Repairs should be 8,000. Are we there? Should be 8,000. Repairs should be 8,000. Repairs should be 8,000. Then we have the rent. Rent is how much? What is the figure for the rent? For the rent, what is the rent? Rent is before we apportion. That you cannot take it as a whole because that needs to be apportioned. That needs to be apportioned. That needs to be apportioned. It needs to be apportioned, so you can't take it as a whole. Can you take it as a whole? You can't take it as a whole. You can't basically take it as a whole. Take it as a whole. So you can't take it as a whole. So we're having 152. So when you're apportioning that, what did you say about the standard rate cells when you're apportioning that figure? What did you say on the standard rate cells as we apportion? So we said that the standard rate cells should be, should be exclusive. So we get the standard rate, that's 100 over 116 times 1116. So what is the standard rate cells? Give me the figure for the standard rate cells. For the standard rate cells, the figure, so that's a million. A million. Is that zero rated? Is that zero rated in this question? So this is the taxable supplies. This is the taxable supply. Taxable supply. So then we get the total supplies. Total supply should be standard plus exempt together. So the standard is a million. The standard is a million. Exempt is 400,000, giving us a total of 1.4. Give me a yes, giving us a total of 1.4. Give me a yes, giving us a total of 1.4. Tafadhali, that is the total supply. Everybody with me? So then we restrict now. On restriction 0.4 times what? Times 48. So that should be 34. So we have it 34 to 86. So not the whole amount is taxable altogether. We only pick for a portion for the taxable supplies. So what is the total input VAT now? Total input VAT. Give me the total input VAT if you had. The total input VAT, this should be 186 to 86 to 86. 186 to 286. I'll be together. 186 to 86. When you add 186 to 86, 186, 286. So give me a yes, perfect. So then the last question talks about VAT, payable or refundable. So we had the VAT payable or refundable. So we talk about VAT, payable or refundable. So we have the VAT, payable is or refundable. So what is the output VAT? Output was it 160 minus input, which is 186, 286. So it's a VAT refund. What is the refund? When you talk about VAT refund, what is the refund? Give me the figure for the refund. $26 to $86. $26 to $86. Sammy kids, where should I pardon you? Where should I pardon you, Sammy kids? Is it on this? We said that Luca. So for the goods, purchase of goods in both exempt and taxable supply was 348. So we got the VAT on it was 48 altogether. But the deductible or the VAT that you can claim for that, we apportion. How do we apportion? We say taxable supplies over total supply because we don't have zero rated. Yes. Not 104. Exempt was 400,000. Sami kids, exempt was 400,000. So we have 1.4. So standard rate was 1 million. Exempt was 400,000. So we have a total of 1.4. So 1 million over 1.4 times 48 to get the deductible input VAT from the mixed purchase that were exempt and taxable, we get 34. So we get the total input to be 186, 286. So we're getting a refund of 26, 286. Sawa sawa. So the question should have been the question should have been 15 marks. What say should have been 15 marks? Yes, that should be. But it was adjusted. That was adjusted. Some are being adjusted. Yes, I know it was adjusted. I know it was adjusted. It was adjusted. That question was adjusted. It was not only 7 marks. How many marks was it? It was not only 7 marks. It was adjusted to more. Yes. Yes. So it depends on those who are marking exam. So sometimes some are being adjusted, some can be lowered. It depends. But this was adjusted for sure. It was adjusted. So we can close it there. So when are we meeting on Friday? On Friday, when are we meeting? On Friday, when are we meeting? So that I plan. You also plan me much earlier. Is it 10 or 6 or 5 in the morning? Yes. Run a poll so that the majority can have their, yes, so that we be fair. Yes. You just create a poll and run that poll. Yes. Yes. That's okay. If the majority says that time, then when we shall do the class at that time, so that you have your free time much earlier on a Friday. So God bless you. God bless you. God bless you. Yes, we must record. Have you ever seen a class that is not recorded? We record. Jacinta, I'm getting back to you. There's a question that you gave me. Yes, I'm getting back to you. Jacinta, are you there? There's a question that Jacinta gave me, I think. I have not. Jacinta, are you there? Is she there? Joy, is Jacinta there? There's a question she asked me on. Is Jacinta there? I think she's not there. So I think I'll meet her in the next class. Let her reach me. Tell her to reach me. Joy, make sure you tell Jacinta to reach me. Is that not a Joy? So we can close it here. So maybe a clarification. I want us to join hands as a team. As a team, I want us to revise together. You see, as a class, Sami kids, can you organize a revision for the class, for our class? You can split it into two or agree. You can split it into two or you just revise the team. You arrange your time, then you meet together and discuss questions. Are we together as a team before you? So agree as a group, then you join hands so that we can have a team that discuss. So I beg to close it there. God bless you and God bless our class. God bless you. So VAT, that is enough for VAT. So God bless you and God bless our class. We can stop it at that point. Thank you. Is that okay? So along the way, I will be talking about basics and how we can basically go about those questions. but it will allow us to pick a simple question and a much complex question. So there's a simple question on partnership, then we pick a much complex question, so that would make it even much easier. So look at August 2023. Check something on August 2023. There should be some August 2023. If there is just a minute, we check on something. September 20, the simplest question. Just a minute. So August 2023. August 2023, we take question 4C. August 2023, question 43. August 2023, question 4C. Together, question 4C. So my name is Cpa Odongo. For those who are new in this class, my name is Cpa Odongo. So we can pick on that particular question. We respond with a yes if you're there. August 2023. So today I want just to break down on partnership. We break on partnership, and if we get time, we will also be able to break on at least, in 2 hours. If we can do this, it's much simpler. So we can break on the partnership. Respond with a yes if you're there. Are we there on August 23? Question 4. Perfect. Mambo. We're being told that Mambo, Motor, and Motorcar are in partnership. So these 3 gentlemen are in partnership, sharing profit and losses in the ratio of 2:1:1. So we have 3 gentlemen. We have Mambo. We have the next, we call the Motor, Mambo Motor, and then we have Motorcar. Are we there? And Motorcar. So basically being told that these 3 gentlemen are sharing profit and loss in the ratio of 2:1:1. So we have a total ratio of 4. Are we together? Are we seeing a total ratio of 4? Juliet, are we with us? Are you with us? A total ratio of 4. So this is what Mambo gets. Mambo gets 2/4, which is equivalent to a half. So Mambo gets a half. Motor gets a quarter, is supposed to be shared for a quarter of the profit. Then Motorcar also shares what you have as a quarter. Is that understood? If that is understood, we give it a yes. If that is understood, we give it a yes. So then we turn the page. So we've been told the statement of profit and loss for the year ended, the statement of profit and loss for the year ended, their statement of profit and loss for the year ended, and you're being told 31st December 2022 was as follows. So given the GP is 4.2. We are given GP to be 4.2. We are being given the sales. Those incomes, what should we know on the part of the incomes? If you have incomes. In taxation, if you're given an income statement, and you're given an income statement on the income, you need to understand the concept of taxable income. And then you also need to understand what's called non-taxable income. So what is taxable income? So in taxation, when you talk about taxable income, these are basically incomes. We say incomes, we call it subjected to what? To taxation. That is what we call taxable income for the newcomers. So incomes not subjected, the word is not subjected to what? To taxation. So that is what we call non-taxable income, incomes that are not subjected to taxation. Together, team, incomes that are not subjected to taxation. Give me a yes if you're together. I hope we are together. Incomes that are not subjected to taxation. So if we had an income statement, team, if we had an income statement Are we together? And we are getting what's called the adjustable taxable income. For the taxable income, are we going to adjust them if you're getting the adjustable taxable income? Are we going to adjust the taxable income? Are we going to adjust the taxable income? So we're not going to adjust the taxable income. But for the non-taxable income, if they are in the income statement, what do we do to them? For the non-taxable income, we adjust them by deducting them. For the non-taxable income, these ones are not adjusted. When you're using the net profit method, we say net profit method, we say not adjusted. These ones, we're basically behind it. What is the logic behind it? So basically saying the logic behind it, when you say non-taxable, when you have a non-taxable income, what does it do to the profit? When you have an untaxable income in the profit, the logic is that it overstates the profit. It does overstate what you call the profit. Give me yes, it does overstate what you call the profit. It does what? It does overstate the profit. So the correction is to do what? Is to deduct the figure. So then on those incomes, number one, is gross profit a taxable income or a non-taxable income? Gross sale of delivery van. Profit from the sale of delivery van. Profit from the sale of delivery van. So that is profit from a capital expenditure. So that should be a non-taxable income. Together, team, that should be a non-taxable income. So we proceed to the expenses. So under expenses, if you're given the income statement, under expenses, so the examiner is basically testing whether you understand the concept. We have the allowable expenses, and then we have what's called the non-allowable expenses. So we have what's called the allowable expenses, and then we have what's called the non-allowable expenses. What are allowable expenses, Steve? When you say allowable expenses, what is allowable expenses? So expenses, we say can be deducted, we say deducted. So the word is cannot be deducted. Deducted, we say against. They cannot be deducted against what we call a taxable. Against what we call a taxable income. Are we together? So look at two things that I'm teaching on these two things. Number one, if I have allowable expenses in the income statement, do you think I should adjust them? If I have allowable expenses in the income statement, should we adjust the allowable expenses in the income statement? If you're using the net profit method, should we adjust them in the income statement? If you're determining the taxable income, if you have allowable expenses, but not human, should we adjust the allowable expenses? Should we adjust the allowable expenses? Should we adjust the allowable expenses? Juliet, should we adjust the allowable expenses? Betty, Evode, Jaffa, Leon, favorite, we do not adjust them. But what about non-allowable expenses if they're in the income statement? Non-allowable expenses, if they're included in the income statement, if they are included in the income statement, if they are basically included in the income statement, we adjust them for the non-allowable expenses. We will definitely adjust them. We will definitely adjust them to do what? To get what to call, to do what? We will adjust them. And how are we going to adjust them if they included? How do we adjust them, the non-allowable expenses? We adjust them by adding them back, adding them back. We say adding them back. So why do we add them back? Because when you have an non-allowable expenses and you've included them in the P&L, they do what? They understate the profit. So they basically understate what we call the profit. They basically understate what we call advertisement. Is advertisement expense allowable or non-allowable expense? Advertisement expense. Is advertisement expense allowable expense or a non-allowable expense? Advertisement expense, that should be allowable. However, if you have an additional information, look up team. If you have an additional information, there is advertisement expense that is non-allowable. Are we together? And we call them capital. We call it capital advertisement expense. Advertisement expense. For example, erection of a billboard, erection of what we call a billboard, erection of a billboard, and a signpost of a sign post. So these ones should be non-allowable. Is that understood? So, but if you have advertisement without any additional information, then we outwardly treat it as allowable. Then the next is basically deposition. Based on tax law, how do we treat deposition? Based on the tax law, how do we treat deposition? Deposition is outwardly called non-allowable expense. In place of deposition, what do we use in taxation? In place of deposition, we have for taxation, we have in place of deposition, we have the investment allowance. In taxation, we don't have an expense called deposition. In accounting and IR, we have an expense called deposition. However, in taxation, we have an expense called investment allowance, to what we call capital allowance, in place of deposition. So then, unless otherwise there's additional information to say something contrary. Then you have the next, we call it value-added tax. Value-added tax. Value-added tax. All forms of taxes, those should be non-allowable expense. All forms of taxes, that should be non-allowable expense. All forms of taxes, those should be non-allowable expense, So then we move to the next, we call budgets. Budgets. How would you go about budgets? Remember, this is block, so we budgets. Look up here. We say that in taxation provisions, we can check the additional information, but we say, number one, all provisions in taxes are non-allowable altogether. So if you're looking at budget, so the essence of it, as you look at the budget, the essence is to look at whether it relates to a revenue item. If it relates to a revenue items. If the budget basically relates to a revenue item, then it should be allowable expense. However, if you have a budget that relates to a fixed asset altogether, that relates to a fixed asset, then that should be non-allowable. Together, that should be non-allowable. If you have a budget that relates to a fixed asset, because that's not a revenue item, and the capital, it's a capital item, then that should be non-allowable expense. Understood? Give me a yes if that is understood. Respond with a yes if that is understood. Perfect. Respond with a yes if that is understood. Great. So then we proceed to the next. We're being told that as it stands, when you have a budget, we treat it as a non-allowable expense. We treat it as a non-allowable expense. So then we have the next, what's called salaries and wages. Salaries and wages. How do you treat salaries and wages? Salaries and wages. Remember, this is a partnership. So under partnership team, salaries to staff is allowable. However, salaries to partners, do you think salaries to partners, should it be allowable or non-allowable? Remember, this is partnership. Salaries to partners. Suppose you told salaries to partners is non-allowable. However, salaries to staff, we are going to treat them as allowable expense. We are going to treat them as allowable expense. Then we have the next information. So we are told that legal fees Somebody says non-allowable. No, check. So in an exam, look up two things altogether. If you have legal fee, you're told legal fee, and you say without additional information, without additional information. If you have legal fees without additional information, that is outrightly allowable. That if we have this legal fee and we do not have additional information, then we treat that additional legal fee as allowable legal fee. Respond with yes. We will treat it as allowable legal fee. Respond with a yes. However, in most cases, for example, that is for the PFT, when you're given a legal fee, you are so sure that there is always an additional information that is added to that legal fee. There is always an additional information that is basically added to that legal fee. So then we move to the next, we're being told that legal fees, we move to the next. We have goodwill written off. The next is goodwill written off. How do you treat the goodwill that is written off? How do we treat goodwill that is written off? Goodwill is an intangible asset that should be capital in nature. So that should be non-allowable. Together, team. So goodwill written off, that should be non-allowable expense. So then we have the last item, interest on partners' capital. How do we treat the interest on partners' capital? How do we treat interest on partners' capital? In relation to partnership, interest on partners' capital. Interest on partners' capital. How do we treat the interest on partners' capital? Interest on partners' capital. Interest to partners are non-allowable. Interest to partners' capital, drawing by partners, salaries to partners, and all payments to partners are basically treated as non-allowable expense. Respond with a yes. Those are treated as non-allowable expense. Together. So if you look at that income statement or the P&L, the profit and loss, we are basically being told this partnership made a profit of, it made a profit of 1,597,597,000. To Copa Moja. That this partnership basically made a figure of 1,597,000. So what is that? That is an accounting profit. Are we together? So we call that accounting profit. Are we together? We call that accounting profit. Respond with a yes. We said that accounting profit is normally different from what we call the taxable profit altogether. So we said that for accounting profit, which you've been given, accounting income profit is basically prepared by accountants. And these accountants are basically using accounting principles. Then this is basically shared taxman. If you're presented with accounting profit, because accounting is different with taxation. Number one, where is the difference? Number one difference comes on. Number one difference, we say that number one difference basically comes from, we say that in accounting, we have depreciation. In tax, we do not have depreciation altogether. So in this income statement, we can see accountant as depreciation, but we say in tax, we do not have depreciation. Instead of depreciation, we have what we call investment allowance. So this accounting profit that has been provided, a figure of 1,597,000 should be should be adjusted to get what's called a taxable income. Should be adjusted to get what's called a taxable income. Switch on the neon signs. So that's a capital expenditure. So that expense for 120 out of 320 out of 380 is non-allowable. So we need to adjust it by adding it back. So we proceed to the second additional information. The examiner tells us that general expenses comprise of the following. That if you look at the figures for general expenses, the figure for 50, it comprises of the following. Number one, we have what's called partners and their party. Payments to partners, partners and their party. How do we treat the partners and their party? So that should be non-allowable expense, non-allowable expense. The second, we have what's called staff catering expenses. Staff catering expenses. Staff catering expenses. How would you treat catering expense? The staff catering expense, that should be allowable expense. For the staff catering, that should be allowable expense. And lastly, on that additional information number 2, we have embezzlement by cashier. Embezzlement by cashier. How do you treat embezzlement by cashier? When you're told a cashier embezzled fund, you cannot tell a taxman that that is an expense. If a cashier embezzled funds, are we to get that is a non-allowable expense, non-allowable expense. So that also needs to be added back, added back. So we proceed to the additional information number 3. The examiner tells us that bad debt represents a general provision. So look at bad debt represents what we call a general provision. So bad debt does only allow what we call a specific provision for bad debt altogether. But we do not allow a general provision for bad and doubtful debt altogether. What is the difference between the two? I know in accounting or in a fund, when you have an increase in general provision, we call it, it's treated as an expense. Increase in general provision for bad and doubtful debt, we treat it as expense altogether. However, in taxation, an increase in general provision for bad debt is treated as an allowable expense. We will allow what's called specific provision. The essence of this, when you talk about general provision, we say it's always based on estimate, based on estimation. Are we together? This is normally based on estimation. Together, team. So when you say a general provision, it is basically based on estimation. And that is in taxation, we do not allow that. Together, team, we give it a yes. If we are together, we give it a yes. We give it a yes. So then we proceed to the next. We're being told, so that bad debt is non-allowable. So we go to number 4. So legal fee comprise of the following. Legal fee comprise of the following. So the first legal fee is what we call a parking fine. Parking fines. The first legal fee is what we call a parking fines. So all that is a non-allowable expense. Number 2 is what we call settling dispute with the customer. Legal fee in relation to customers and debtors. How do you treat? Legal fee should be allowable expense. That should be what's called allowable expense. Allowable expense. And lastly, we say appeal on tax assessment. Appeal on the tax assessment. So the last one is basically on appeal on the tax assessment. Appeal on the tax assessment. That should be non-allowable expense. So look at additional information number 5. Additional information number 5. So the examiner tells us that investment allowance were agreed at 380,000 with the Commissioner of Domestic Tax. If you're told that investment allowance was basically agreed at a figure of XYZ by Commissioner of Domestic Tax, what is it telling you? Are we going to calculate? No calculation needed. Are we together? Even if you had investment allowance, we agree that there's no calculation that is basically needed to calculate what we call investment allowance. Are we together? I hope that is at home. Is that information explained perfectly well? Is the information explained perfectly well, even for our newcomers? Those who are joining us for today, is the information basically explained perfectly well? Thank you so much. Let's move to the required. We can go to the required. So we can go to the required. So on the required, we're being told that prepare adjusted taxable profit or loss. Prepare what's called the adjusted taxable profit or loss for the year ended 31st December 2022. Which method are we going to use to prepare adjusted taxable profit for the year ended December 2022? Which method are we going to apply in preparing the adjusted taxable income for the year ended? So we're going to use the net profit method. Why net profit method? Why net profit method? Because accounting profit has been provided. Then the second item is basically talking about allocation of taxable profit or loss in C above. So we start with the first one. What is the name of partnership? So we call it Mambo Motor. We call it Mambo Motor, and what's called and motor car partnership profit for 2022. So we have the figures here. We have figures there. So we start with accounting profit provided. So we have the accounting profit. This is provided, accounting profit provided. So what is the figure? That should be at home. What should be the figure? So the figure is 1,597,000. So we have 1,597,000. 1,597,000. We have 1,597,000. Then you say you add back, we call it add back. Add back. Look up add back. What are we adjusting? We say, look at the words. We say non-allowable expenses. Non-allowable expenses. We say in P&L, and they say, and what's called taxable income. We say not in P&L. And the taxable income, basically not in the P&L. Together, team, we respond with yes. Please explain. I will not require you to write this. Look up, team. These are now the shortcuts. Do you think you're required to write non-allowable? Do you think that somebody is going to mark because you write add back non-allowable expenses in the P&L and taxable income not in the P&L? What is my instruction? As the low-hanging fruits, we say that very importantly, remember, you don't need to write this. Martin, is that noted? You know what is needed. For class purpose, I have to write this because I'm teaching. I have to show you that what are we adding? Non-allowable expenses in the P&L and taxable income not in the P&L. But now for the student, when you get to exam, just write add back. You don't need to write the whole thing. Is that noted? That is there for you to save time. It is there for you to save time. So we start from the P&L, the non-allowable expenses that are in the P&L. So we call the first one is deposition. We have it. What is the figure for the deposition? So the figure for the deposition is 148. The figure for the deposition is 148. So we proceed to the next, we have value added tax. Value added tax. So we have it as the value added tax. What is the figure for the value added tax? The next non-allowable, that should be 1. I hope it is 150. I hope it is 150. Value added tax, that is 150. Then we have the next is still purchase of furniture. We had the purchase of what we call furniture. We have the goodwill written off. So for the goodwill written off, that is 2,500. Then you have interest on capital. Interest. Is there anybody we are losing or we are together? Favored, tuko pamoja? Favored, are we together? Wait first. I'm still on income statement. I'm going to additional information. Don't worry, is when I'm going to the additional information. Is everybody okay up to this point? Perfect, if you're together. So I have an issue with this. Look up, team. Are we together? Look up, team. I have an issue with this, and it normally happens a lot. This one normally happens a lot. This one normally happens a lot. And based on the fact that if you look at this setting, nobody is going to mark a full paper. So it means that everybody is going to mark. Each and every marker is basically going to mark only a single question together. Each marker is only going to mark a single question. So look up, when you turn interest on capital, like we have interest on capital, some students normally love merging it together. Some students will say interest on capital, then you add to 140 plus this, that should be to 20. Are we there? Some students, Regan, switch off the video. So when it comes to this, look up, team. When it comes to this entry that we call interest on capital, Regan, you switch off the video. When you have the entry on the interest on capital, some students love merging this. And they'll say, for example, 80 plus 140, then it says, or you can easily get with a single entry. Marube, switch off the video. Make sure you switch off the video. Regan, switch off the video. So then you make sure that you separate those items. Is that noted? We respond to the yes if that is noted. If that is noted, we give it a yes. So don't have it as a summary. Of course, it should be right, but now depending on whoever is marking that paper, if it's rushing and in an entry, Regan, switch off the video. Kindly switch off the video, Marube. So perfect. So then we say that interest on capital, that is noted. Instead of having it as a single entry, separate so that you do not miss on that particular entry. So perfect, how together. So I want us to proceed to the next additional information on the additional information. So being told that advertising expenses include 120 spent on neon sign. So just come up on this additional information. We have what's called the neon sign. So what is the figure for the neon sign? The figure for the neon sign is 120. Give me a yes if you're together. The figure for the neon sign is basically 120. So the figure for the neon sign is 120. So then we proceed to the next additional information on general expenses. We have partners and year party. We call it partners. And you say an year party. So for the partners and year party, the figure again is 150. We have it as 150. Then we start catering what's allowable. Then you have what's called embezzlement. Embezzlement by cashier. So what is the figure for the embezzlement by cashier? The figure for the embezzlement by cashier. So embezzlement by cashier is basically a figure of 210. Embezzlement by cashier is a figure of 210. I hope you can see those entries perfectly well. So I want us to stretch to this other side of the board. We extend the board. We have this. We can have our line for the board on this other end so that we make it. Are you able to see the board? Are we able to see the board perfectly well? If you're able to see the board perfectly well, we respond to the yes. General provision. So we say general provision for bad debt. So we call it Elizabeth, general provision for bad debts. Bad debt. So that bad debt is general provision. So what was the figure for that bad debt? The figure for the bad debt? Give me the figure for the bad debt. So that figure should be 250. Is it 250? Respond with a yes if that figure is 250. If the figure is 250, we give it a yes. So then we proceed to the next. We're being told legal fee comprises of the following. We say that parking fines and unallowable parking fines, that should be 130. Parking fines should be 130. Settling a dispute with customer was allowable. Appeal, then we have lastly, appeal on tax assessment. We call it appeal on tax assessment. Appeal on the tax assessment, that is 210. So get for me total non-allowable expenses. Add for me the total non-allowable expenses. Add for me the total non-allowable expenses. So the total non-allowable expenses. The total non-allowable expenses. What is the total non-allowable expenses? If you add them, what is the total non-allowable expenses? The total non-allowable expenses. So we have it 24. So we have it 24, 33. So that is okay. Can somebody confirm that? Did you say less? We move to less to what we call deduct. So say here less to what we call deduct. Then we'll give you some secrets. Deduct, what we call non-taxable, non-tax. We call it operating income, operating incomes. If you say in P&L, non-taxable operating income in the P&L, we have the investment incomes in P&L, investment income in P&L. Then we have allowable expenses. We call it not in P&L. Allowable expenses not in the P&L. Again, for teaching purpose, we're saying that for teaching purpose, we're basically saying that for teaching purpose, we're saying that we must show what we are lessing. So we're saying that what are we lessing? Non-taxable operating income. For example, what is examples of non-taxable operating income? Example of what we call the non-taxable operating income. Example of the non-taxable operating income. So example of the non-taxable operating income: unrealized foreign exchange gain, unrealized foreign exchange gain. Then you have investment income. For example, dividend income is not a business income. Dividends income is not a business income. Interest income is not a business income. Then lastly, we have what's called allowable expenses not in the P&L. If you're given an income statement by an accountant, outwardly, one of the allowable expenses that you not find in the income statement is what? Is the investment allowance. Then in summary, we're saying for exam purpose, don't write this, you'll be wasting time. In an exam purpose, you just say less to deduct that, and you already know what you need to learn to less. So one of it, we start with sale of delivery van proceed. So we call it sale of what we call of delivery. We call it delivery van proceeds. What is the sale of van proceed? Because that is a non-taxable operating income. What is the figure? The figure is 1.4. The figure is 1.4. The next we have what's called allowable expenses that is not in the P&L, that is the investment allowance. What is the figure for the investment allowance? Investment allowance, it is provided. So you don't calculate because this is already provided. So the figure is 380,000. So how much do we less? Get the total that we need to less. Get the total that we need to less. So get the total that we need to less. Get the total that we need to less. So what is the total? This should be 17. This should be 1780. So then we have what's called adjusted. We call it adjusted taxable profit. Adjusted taxable profit. So what is the figure for the adjusted taxable profit? The figure for the adjusted taxable profit. Give me the figure for the adjusted taxable profit. So provide me the figure for the adjusted taxable profit. So we have 1597 plus 2433 and minus 1780. So what are we having? That is 2,250,000. 2,250,000. So tricks, for example. So tricks, we just talk about tricks on exams, on what you've done, tricks on the exam. Look at Chile. So number one, when you're doing this paper, I hope you're there. Number one on this paper, the first trick, the goal is not perfection. Number one, you need to understand the goal is not to be perfect altogether. Is that noted? The goal when you're doing these papers, the goal is to make as many entries as possible. The goal is not for you to be perfect. It's for you to get the right calculation. Because even this marks, it doesn't account for anything in this particular one. In this particular adjusted taxable profit, this will not add to any mark altogether. This particular summation that we've gotten, it does not account for any mark altogether. As many entries as possible. The goal is not to be perfect, but is to make up as many entries as possible altogether. So when you're doing this paper, in part one, adjusted taxable income, your concern should not be to add, but your concern should be basically making as many entries as possible. Juliet, are we together? If we're together, we respond with yes. Every exam has a way to pass it. Are we together? Some of the students who pass exam is not because they're more intelligent than others, but they understand the secret to exam. And that is what you need to know. At this point, what you basically need to know is the secret to exam. How do we get to pass exam? Are we together? You don't need to be perfect. You don't need to even know everything to pass exam. So I've told you that the key things, these are the entries. This. So if you look at this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Are you seeing? 14, 15. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 15. I have about 15 entries altogether. So if you look at this, this is about 7 marks. If we have 15 entries, logically, the examiner would want only 14 entries altogether. So have you seen me checking on this, on that particular one question? Have I checked on this solution? I have not checked on it, because what is important in the first information on the adjusted taxable income is the entries, not the solution. So let's say, for example, Juliet, I'm in an exam scenario. Let's say, for example, I am in an exam scenario, and I find myself, I have not added this. Should I panic? Juliet, should I panic? If I don't have time, should I panic? You should not panic. I can come here and just decide no time. I'll just come and guess. I can even guess 1.5. Are we together? I'm saying if you don't have time, don't panic. Are we together? I'm saying don't panic at all. However, because this is partnership, if it was a company, then if it's a partnership, the only thing that you're going to miss automatically, if this is, be assured that you are not able to get the share of profit and loss, share of what you call profit and loss. That is the only thing that you're going to miss on the second part. As we move to the second part, I'm saying very importantly that what you're likely to miss when you're now moving to the second part is what you call the share of profit or loss, share of profit and loss, because this one now means it has to be correct. But if it was a company, for example, if this was a company, not now a partnership, even if I write my 1.5 and I'm told taxable income, I'll simply say 30 times that and I have everything. If there's no withholding, I'll just have my all marks. But now for partnership, If this one is not correct, the only thing that you're likely to miss is the share of profit or loss. So I want us to go to allocation. Let's move to allocation. Are we there? We respond to the yes. If we are there, we respond to this. So I move to the other part. I move to this other part. Once I move to this other part, we call it this part B. We call it allocation schedule. We call it allocation schedule. We call it the allocation schedules. Partnership allocation schedule. We have the partnership allocation schedule. So on the partnership allocation schedule, how many partners do we have for this particular question? How many partners do we have for this particular question? We have 3 partners. So we have Mambo, we have Moto, and then we have what's called what goes to the partners allocation schedule. That is what you need to know, number 1. So that some things you just put them there. What goes to the partners allocation schedule? Salaries to partners. Are we together? Salaries to partners. We have interest on capital. We have bonuses to partners. Are we together? All commissions to partners. We have interest on drawing, not drawing, but we have interest on. Yes, it was provided. So one of the things, again, also very important about exams is understand the formats. What is the format of allocation schedule? What is the format of getting adjusted taxable income? So on that format, what do you take to the partners allocation schedule? I've said, number 1 is the partner salaries, interest on capital. We have bonuses to partners, commission to partners. It goes to the allocation schedule and interest on drawing. However, we do not take drawing to the allocation schedule. Do you have salaries to partners in this question? Do you have the salaries to partners on this question? We do not have salaries to partners. Do you have bonuses to partners in this question? Do you have bonuses to partners? We don't have. Do you have commission to partners in this question? We do not have commissions to partners. Do you have interest on drawing in this particular question? We do not have interest on drawing in this particular question. So I come here, but you have interest on capital. Do you have interest on capital? Interest on capital. Do you have interest on capital on this particular question? Interest on capital. If you have interest on capital, we agree. So if you look at the interest on capital, we pick on the interest on capital. Mambo gets 80. So we have Mambo 80. Moto, we have, Moto is going to be 140. Moto is 140. Do you have motor car? We don't have motor car. So the total here being to 20. A total basically being to 20. So we have a total of 20. Profit, historical loss. All that which can be. All that share of profit or loss. Then you have the net, we call it the net taxable. That is from the net taxable operating profit. From the adjusted taxable income. What is the net taxable operating? 2,250,000. Give me a yes if we are there. So this one we call it B. We give it a call and we call it B. We call it B. We call it B. We call it B. So the next one, we basically, this one we call it A. Are we together? How do you get the profit share, which is in the middle? We call it C. So this C should be B, which is the net taxable operating income, plus summation of what we have here, summation of A. So what do you have as the profit share? What is the difference? Which is the profit share? B minus A. What are we having? B minus A. What are we having for B minus A? What do you have for B minus A? B minus A, what do you have? B minus A, what do you have? Get from me B minus A, which is the profit or loss share. In this case, that's going to be profit because this is going to be more than summation of A. So that should be, so somebody say 2030, that should be 2030. So this is shared based on ratios, based on ratios. Do you have the ratios? Based on ratios. So this is basically shared based on ratios. This is basically shared based on ratios. So we have the ratios. We had Mambo, Moto, we had Moto, and then we had Motor Car. So we have Mambo, we had Moto, and then we had Motor Car. Mambo, Moto, and then we had Motor Car. So Mambo was basically getting what? Mambo was getting a half. Moto and Motor Car were getting a quarter. 2030. Then this also a quarter times 2030. 2030, what do you have? What do you have? So this is 1 million, 15. What about for the two more motor car? So that's 507, 500. 507, 507, 500. The next 1095. Then 507, 507. That's 140. 647. We have 647, 500. Then we have 507, 500. Are the figures correct? Are the figures correct? Kindly confirm if the figures are correct. Kindly confirm if the figures are correct. Are those figures correct? Give me a yes if those figures are correct. So perfect. So then we'll say add other taxable investment income. For example, do we have other taxable investment income? For example, farming, rental income, dividends from cooperative society, dividends from cooperative. Do you have other taxable investment income? In this particular question, do we have? Do we have? We don't have. So for this question, we don't have. If we had, we would have added. So then we say total taxable income, total taxable income. So we don't need to even extend this. This should be okay. So partnership. Once we distribute this on a graduated scale, we are going to tax the partner on a graduated scale. On a graduated scale. Perfect. Are we together? So look up. So this answer, the reason why most students will not get this answer for partnership, this one will be one of the hardest answers to get because this is tied to you being correct on adjusted taxable income. Are we together? Most students will not get this correct because this is tied on you being accurate on the adjusted taxable income. Are we able to note it? So if this question is 2 marks, look at 1, 2, 3, 4, 5. But for this, in most cases, because students don't get this, so it's pegged on this. Like for this particular question, if you had gotten this and this, then you would have 2 marks. If we have got, so that is 2 marks. With this, you'd have gotten 2 marks. In most cases, students will not get these figures because students are not always correct. You'll find that all students do not get this. Are we together? Under rare cases, you'll find students being accurate. So for this particular question, you only need to get this, put this and this, and you have the whole mark, and you have the whole mark. Is that understood perfectly well? I want to pick a complex question. Yes, it's good to have a complex question. I want us to pick a complex question. I want us to pick a complex question. Is that understood? We respond with a yes if that is understood. If that question is understood, Juliet, to my lawn. Juliet, are we together? Is there anybody with a question? Is there anybody with a question? Nani ana swali? Yes, Patrick and James and Patrick, Highway Enterprise. So is there anybody who needs a break? Ama tuendelee. Is there anybody who needs a break? Ama tuendelee. Is there anybody who needs a break? Kindly let me know so that I can give you a break. Or 29. Yes. How many minutes break? How many minutes break? We don't take a lot of time. So why don't we settle on the middle 7? So at 7, you should be back 7. We make it 7. Okay. We can pick on the next. So that is December 23, a bit of more complex question. Are you on it? If you're on it, if you are on it, when do we use the gross profit method? When accounting profit is not provided. When accounting profit is not provided. Juliet, when accounting profit is not provided. Give me a yes if you're together. So then we come to this. So being told that James and Patrick, can I start reading? James and Patrick. We are being told that James and Patrick, James, deck 23, question 5D. Deck 23, question 5. We call it question 5D. Question 5D. Question 5D. Question 5D. So if you're there, we get this. So we've been told that James and Patrick, we're told that James and Patrick are partners trading as a highway. So being told that partner trading as highway enterprise. Are partners basically trading, and you say trading as highway enterprise, and sharing profit and losses equally. So what is the profit and loss sharing? So that basically, Davis, are you there? Davis, are you sorted? Davis, if you're there, you give me a yes. Davis, is everything okay? Davis, is that okay? Okay, perfect. Sharing profit and losses equally. So when you say sharing profit and loss equally, that's half. Are we together? That's basically half. Are we together? 0.5, 0.5. So then you're being told that the following information was extracted from the books of account for the year ended the 1st December 2022. Again, we're given the income statement. Are you seeing we're given the income statement? Are you seeing we're given the income statement? Again, the same concept. So we're being told that, number one, we're being told that sales a taxable income or a non-taxable income? Sales. Is sales a taxable income or a non-taxable income? Sales. Is sales a taxable income or a non-taxable income? So sales should be a taxable income. Then we have the rental income for commercial property. Rental income for commercial property. Is that a taxable income? Dividend income, and that is a gross figure. So dividend income is also an investment income. Dividends income is also an investment income. But remember, not all dividends are together, not all dividends, but you say dividends from cooperative society other than SACCOs. If you receive dividends from a limited company, but if you receive dividends from a limited company, that's a qualifying dividends. So the only dividends that we take to the allocation schedule is dividends that is non-qualifying, and the examples of non-qualifying dividends, that is dividends from cooperative society other than SACCOs. Is that noted? Give me a yes if that is noted. Give me a yes if that is noted. Perfect. So then we have what's called the sundry expenses. Sundry expenses, is that a taxable income or a non-taxable income? Sundry expenses, is that a taxable income or a non-taxable income? Sundry receipt is a taxable income. Are we together? That's a taxable income. Sundry receipt is a taxable income. We give it a yes. Sundry receipt is a taxable income. Give me a yes if you're together. If that is at home, you give me a yes. So then we proceed to the next. We have gain on foreign exchange realized. So the word realized makes it gain on foreign exchange realized. So what does it mean when the examiner says gain on foreign exchange realized? Is it taxable or non-taxable? Gain on foreign exchange, and the word is realized. So what does it mean? Is it a taxable interest from foreign bank? So interest from outside the country. How do you treat interest from outside the country? Those are tax exempt. In fact, we call them tax exempt. Interest from outside the country, we call those are tax exempt. So when you receive interest from outside the country, we call them tax exempt. So those ones, we are supposed to, that should be non-taxable. So then we have the next, we call it profit on disposal of machinery. Profit on disposal of machinery, that is profit from a capital expenditure. So that's a non-taxable income. That is a non-taxable income. So then we have what we call less expenses. We move to the expenses. So number one expense, we have cost of goods sold. Cost of goods sold as an expense. Cost of the goods sold. How do we treat the cost of the goods sold? Cost of goods sold. Cost of the goods sold. Cost of what we call goods sold. So that's allowable. That should be allowable. Then we have registration of patent. Registration of patent. How do you treat the registration of patent? Registration of patent. Registration of patent. Registration of patent. What did you say? That should be non-allowable. Registration of patent, that should be non-allowable. So registration of patent is non-allowable. Then you say hosting a business website. Hosting a business website. Hosting a business website. Hosting a business website. That's a non-allowable expense. Non-allowable expense. Hosting a business website, that should be a non-allowable expense. Hosting a business website is a non-allowable expense. The next, we have what's called purchase of a computer. How do we treat purchase of a computer? That should also be non-allowable expense. Then you have what's called staff salaries and wages. Staff salaries and wages. Staff salaries and wages. The word is staff, so that should be allowable expense. So then we go to the next, partner salaries. We have James and Patrick. So the partner salaries, those are outrightly non-allowable expense. That is for the insurance. That should be allowable. Purchase of office machinery. Purchase of what is called office machinery. So how do we treat the purchase of office machinery? Purchase of office machinery. That's a capital expenditure. We claim investment allowance on that. Then you have commission to partners. Commissions to partners, payments to partners. How do you treat them? Commissions to partners. Commissions to partners. Commissions to partners, that should be non-allowable. So then you have the next, stamp duty. Stamp duty. Stamp duty. Stamp duty is non-allowable. Then we have the next, we call it impairment of goodwill. Impairment of goodwill. Impairment of goodwill. Impairment of goodwill. That is also non-allowable. Then we have the next, bank charges. Those are interest rates. Bank charges. How do we treat the bank charges? How do we treat the bank charges? Bank charges, interest rates. How do we treat the bank charges? No. Bank charges is different from loan. Bank charges are interest rate. So bank charges are allowable expense. Then we have what you call fixing of neon sign. Fixing of neon sign. Fixing of neon sign. So that's not allowable because neon sign is a capital expense. Are we together? Fixing of neon sign, that should be non-allowable expense. Fixing of neon sign, that should basically be non-allowable expense. So we have the next, we have what we call VAT paid. All forms of taxes, VAT paid. VAT paid is what? Is non-allowable expense. VAT paid is a non-allowable expense. Then you have the next, what we call gift to employees. Before that, we have legal fees. How do we treat the legal fees? Legal fees. If there's no additional information is allowable. However, we check the additional information. It's important that we check additional information. Then you have gift to employee, gift to employees, gift to employees, gift to employees. So we had repairs of machinery, repairs of machinery. That should be on the repairs of machinery. Repairs of machinery, no. Repairs of machinery is different from machinery, purchase of machinery. So repairs of machinery, Betty, that should be allowable expense. There's a difference. Repair of machinery is a revenue expense, which is allowable, but purchase of a machinery is a capital expenditure. So that is a capital expenditure. Favored, are you there? Favored and the rest of the team, are you there? If we are there, we give it is. Ibrahim, are we there? Thanks, Regan. Are we together? Regan, I hope you're there. So then we have we have the next item. We call it purchase of a telephone equipment. Purchase of a telephone equipment. So that's a capital expenditure, that's non-allowable. Then you have gifts to employees. We have the gifts to employees, what we call the gifts to employees for meeting the targets. Will you allow that? For meeting the targets. When they meet the target, gifts to employees for meeting the targets. For meeting the targets. Why do you say that allowable? Is it not related to what? Because these guys are basically attaining the target. So that should not be treated as non-allowable. That should be allowable. Are we together? Are we together? So then we have the next, we call it, we have what's called, we have the next, donation to Red Cross. We say donation to Red Cross. So they've not just said donation to a local church, they've said donation to Red Cross. When they say donation to Red Cross, is that allowable or not? It's a charity. When they say Red Cross, then that should be allowable. Are we together? Are we together? So then we have the next, the cost of, loans to employees written off. Loans to employees written off. Is that an allowable expense? Really? Loans to employees written off. Loans to employees written off. Can you tell a taxman that loans to employees written off is an allowable expense? Is that allowable expense or non-allowable expense? Loans to employees written off. That should be non-allowable expense. That should be non-allowable expense. So then we have the next, what we call the cost of relocating to a new premise. Cost of relocating to new premise. So the costs that are related to relocation. So cost of relocation to a new premise. Premise is a capital expenditure. In fact, when we talk about premise, these are more capital in nature. When we talk about relocation, we have, when we talk about relocation, we have a lot of it is on capital expenditure. We together. Look up when you are relocating. We have Musa and the rest of the team. When you are relocating, a lot of expense is basically incurred on a more capital in nature. Are we in agreement? Look at him. Are we in agreement when you are relocating? Yes. So that's why in most of the cases, however, if they're very specific, that this was transport from X to Y, then that we can pick out as allowable expense. Are we together? Regan Marube, that one can easily pick as allowable expense. However, when they say that I'm saying somebody has a very good question here. Betty, forward that question again. Maleo, please explain, are we relocating to our own building? Give me a yes, Betty. Most of the time when you talk about relocation, most of the time when you talk about relocation, Betty, most of the expenses are basically capital in nature because you're buying assets altogether. You're buying assets. You are, most of the costs. However, I'm saying this. However, Betty, if you're told that this location was basically maybe transport, if it's like for example transport for moving, then that would be allowable. But however, on relocation, a lot of expenses altogether. Most of the expenses are basically incurred on what? On capital in nature. So that's why most of the cases, when you're told cost of relocating, we will always treat it as non-allowable expense. Non-allowable expense. Betty, I hope I've answered you. Respond with a yes if you're together. Respond with a yes if you're together. Yes, if there's no additional information, then that would be non-allowable. That would be outrightly non-allowable. So, thank you so much. Are we together? Then we have the next. We have what's called redundancy payment to employees. Redundancy payment to employees. How would you treat redundancy payment? Redundancy payment to employees. Redundancy payment to employees. Redundancy payment to employees. How would you treat redundancy payment? You're laying off, that can be treated as allowable. Then you have investment seminar for the retired. Investment seminar for the retired. Investment seminar for the retired. How would you go about investment seminar for the retired? For the retired, how would you go about it? Investment. Why do you say non-allowable? If they're in the process of retired, that would be allowable altogether. We'll go avoided. When you're laying off people, are we together? No, it means that retirement is a process altogether. Retirement is a process altogether. Are we together? It doesn't mean that they are fully retired altogether. So those who are retiring, you can have an investment seminar for them, maybe just to educate them. Are we together? I'm saying, you see, when you say retired, it doesn't just mean that investment seminar for the retired employees. It's a process altogether. Sometimes, for example, when you're retiring employees, are we together? You also train them on how they'll basically do what? They'll basically survive outside there. Are we together, everybody? So for those employees who are retired and you're basically incurring cost to basically train them on how maybe to survive, that would be treated as allowable expense. Are we together? That would be treated as allowable expense. Together, everybody. Give me a yes if you're together. So then we have the last one, we call it depreciation. We call it depreciation. Is depreciation allowable or non-allowable expense? So that's outwardly non-allowable. So if you look at accounting profit, this business is basically making a profit of 11,745,000. So which method are we going to apply if you're told to get adjusted taxable income? Adjusted taxable income. So you're going to use that. So I want us to go to the additional information. Though our time is running, we can try and finish this together. So insurance, look at insurance. So we told that insurance cover for imported machinery, insurance cover for the against loss on transit. Against loss on transit. Against loss on transit. Then we have insurance cover for the business premise. Insurance cover for an imported machinery. We have done capital investment. So when you have insurance cover for an imported machinery, investment allowance, that is going to be added to the cost of machinery, and you claim investment allowance together. That is going to be added to the cost of equipment of machinery, then you claim investment allowance. So that is non-allowable. Together, team. Betty, I'm saying, if you understand the concept of investment allowance, we are going to add that to the cost of machinery, and then we claim investment allowance. Together, team. Give me a yes if we are together. Give me a yes if you're together. So then we have what's called insurance cover for the business premise, insurance cover for the premise. How would you treat the insurance cover for the premise? That should be allowable. Then we have next, legal fee. So eventual legal fee include 25,000 incurred on drafting a loan agreement between partnership and the bank. Legal costs incurred to draft a loan agreement. What did he say? Legal costs incurred to draft a loan agreement. How do you treat it? Non-allowable expense. That should be non-allowable expense. Are we in agreement? That should be non-allowable expense. So then we have the cost of carriage, the cost of carriage of machine, the cost of carriage of the cost of carriage of machine to the premise, the cost of carriage of machine to the premise amounted to 34. So carriage of machine to the premise. How are you going to treat that carriage? Very interesting. Again, it's an carriage of machine to the premise. Have we used the machine? Yes, you add it to the machine. That should be non-allowable. That machine has not been used. Are we together? That machine has not been used, so that you add it and claim investment allowance. So then we're being told that inventory was undervalued by 48. How do you treat? Do we have them in the notes? Do we have them in the notes? So overvalued inventory. So if they're tricky, again, I told you, Betty, if they're tricky, I don't want you to stretch your mind. What was the secret, Betty? Maybe on one area. What is the secret, Betty? If you don't, add and deduct, but not the whole paper. If you find yourself, you don't know where it's going, get the figure, add it, and put it there. Maybe one or two areas when you don't understand, so that you don't miss on that entry, on that inventory, just that inventory. Then what about opening stock undervalued? Opening stock undervalued. What are you going to do to opening stock undervalued? Opening stock undervalued. What do you say? Opening stock undervalued. Opening stock undervalued. Opening stock undervalued. So when an opening stock has been undervalued, what does it mean when an opening stock has been undervalued? How does it interfere with the gross profit when opening stock has been undervalued? If we undervalue an opening stock, what happens to the GP? Jeff, what happens to the GP? Did I teach on that? Did I teach on that? Somebody just to confirm whether I taught on that. Was it taught? I'm asking whether it was taught. Yes. I'm saying, was it taught before we say? Was it taught? That is what I was confirming from you. I'm saying, was it taught? Was the concept taught? Perfect, if it was taught. So those are very good instructions. So we say that when you don't understand on those opening and closing inventory, when they are overstated, you are in a panic mode altogether. You are in an exam. What did I say, Betty? A body. When you're under that circumstance and you don't know where to pick it, put it on addition and put it on less, so that you don't miss the end, add and deduct at the same time, so that you don't miss on that entry. Yes, that is why we did, but not the whole paper. Don't make the whole paper that everything you're putting added less. You'll appear like you don't know anything. Yes. So this question, I will do it, but I want to spend the better part of the 4 classes. Do you say we've done a lot of calculation? We've revised enough. Who is saying we've revised enough for PFT? Can you say that this class we have revised over and over? I wanted to work on theory because I want this class, I want to have a 95. Somebody who should give us a 95. Is there somebody who's going to give us a 95? I want to work on those theory so that we at least we get somebody on the 90 percentage in this class. So I want the next 4 classes so that I teach you some things on theory. Public finance and taxation. Yes. At least somebody should give Mwalimu a 90 and above. That should be better for us. So we can finish on that, but we're going to meet on Saturday in the morning. Please note, our representative is not here. I'm going to meet you on Saturday morning at 1:55. So this is Focus Online College. This is Cpa Odongo's number. Yes, you can consult us. This is basically for Cpa Odongo. Yes. You can follow us in our YouTube. You can look at Cpa Odongo, what I've done in the YouTube. You can learn how to get it. Kindly employment question module. I will assist you, Juliet. We will do that. Monday and Saturday. Monday and Saturday. Monday and Saturday. Saturday, we normally have 2 classes, in the morning and the evening. In the morning and evening. 2 classes, morning and evening. So our blocks are still on. Thank you. Thank you so much. Yes. Morning, we'll have it at 5. Morning, 5 p.m. to 7. So I'm training guys on theory. That is what I want to train you, because I want to balance this paper. Yes. We've done the theory, but I just want to train you. Public finance, we revise. Those notes, those videos, we just revise. The things that I want us to look at on those theory. So allow the 4 classes we've learned. They have learned a lot. Yes. Yes, they have learned a lot. So you can, our blogs are still on. You can still join us. You can have access favored. You can have access to all the videos, all the blogs once you join. So you can reach us on those numbers. So you can say that God bless you and God bless our class. Unless somebody has something that is burning. Martin, is there something remaining? Something that you need me to say? Martin, do you have anything? Regan, especially for the newcomers. You okay? Regan, do you have anything? Any question? Favored, Musa, do you have any question? Is there anybody with any question? Yes, any question so that you can assist. So we close it there. God bless you and God bless our class. Yes. So we see one another in the next class.